Hi everyone, Stuart here. Hope you can hear me loud and clear. It's Monday, the 3rd of March, so we got a new month. Very interesting February. I took last week off away from the screen, so I didn't really look at any charts, but the turn that we'd seen the end of the previous week has continued. Here, I'm just, excuse me a minute. Here you can see on the gold market here, we topped here on Thursday, and a big reversal here on the 25th. In fact, that was the what was the time? That was the Monday, wasn't it? Tuesday. We continued to move higher. Actually, gold is actually a bad example of the turn at the end of that previous week. But anyway, we'll come to those in a minute. So this is Thursday's high, the 20th, where we touched this 29.55 zone for 1, 2, 3, and then the fourth day we reject it quite significantly here on the 25th. You can see the MACD histogram turning from green to red. We'd had a cross on the MACD and the signal line here. RSI also moved in out of the overbought area into the out of the overbought area down on this 25th. So big move down. It took us till the 27th before we breached the 20-day moving average, but we down again on Friday, below the key 2860 zone. For gold. Hope everybody can hear me. Let me just double check everything's working okay. I think it is. I'm sure it is. Mary had a little lamp. Yeah, there we are. Videos on. Good. Right. Cool. Everything looks okay here. Let me just actually make myself a wee bit smaller. There we are. So I said the 20-day wasn't broke until Thursday. Friday went down again, and then our new low that we're looking towards is the 28.34 zone here that we went to intraday on Friday before we finally closed. Interestingly, back above this 28.60 area. 28.60 area was a resistance zone here at the beginning of the month as we were rallying up, and it was the bottom of this candle that we mentioned last week when we were looking at the gold, or the week before, I should say, when I last did some broadcast when we were looking at a potential next support area was this 28.60. So we've come into that support area. We're under the 20-day at the moment, so gold is looking pretty weak, relatively weak at the moment. We'll see. It's having a better day today. It's bounced up on the weakness of the dollar. US markets are have just opened 20 minutes ago, and they're sort of in the green, a bit of a mixture. The Nasdaq's just turning green at the moment. So gold has bounced up today on the hourly chart. There's our gold. Oh dear, do this to me. Sorry, bit out of. There we are. There's today's move back over the 20-hour moving average from this morning, from the open last night, I should say. And we continue to accrue, and we're up at a 28.80 zone is the key resistance on this hourly chart here. You can see that we're literally where we are now at 28.80 zone here, resistance. So it's still pushing higher. Let's see how that goes as the US session gets into full swing later on today. So let's go back to the daily timer. See that's that. Rollover. What we're looking for today, we've had some relatively positive manufacturing PMI data, and it's not often I say that in the last 2 years or so. But the headline first thing this morning was the Chinese manufacturing numbers coming in much better than expected at 50.8. So it's just over that expansion zone. Where the sector's in expansion over 50, but it was significantly better than expected. It was 50.1 last month. It was expected to creep up a little bit by 3 ticks, but it actually increased by 7 ticks, nearly twice as better than the market was expecting from China. Obviously, Chinese data obviously taken with a bit of a caveat, to be honest, but hopefully you can see that. I can't really zoom in this, make this any bigger, unfortunately. But you can see in the European data, it was all better than expected, led by the Swiss. Within the Eurozone, the big one was the German number coming in at 46.8. Again, it doesn't sound very much. Still in recession, still in contraction, but it's a 25-month high. So more than a 2-year high for German manufacturers. So green shoots potentially looking to start to burst through there as spring is around the corner, and German manufacturing possibly bottomed out and perhaps starting to turn up. If we look at, if we just look at the where did I have captured a screenshot of this here this morning from the actual PMIs? As you can see here, this is the this is the data we've been looking at. So 50 here, remember, guys, is the area where a sector is in either expansion or contraction. So we obviously had the hit of the COVID crisis in 5 years ago now, isn't it? March 2020, really, everything hit, and we went down, under 34. We've rallied significantly due to the stimulus. But since here, we'd say mid 2022, the pressure has been on German manufacturing, and it's been moribund really since then. Post COVID, we went as low as I think it was 37.2. I think it was. I can't remember the exact number, but in 23. But as you can see, we've struggled to get over the 45 level. And I say we're certainly not in any sort of expansive mode as far as German manufacturing is concerned there. So, but it is, you can see here, the best data for 25 months, the number that's come out today. So that was quite a significant number for German manufacturing yesterday, this morning, as this has come out. So it's quite significant, 46.5. Euro really is still sort of trapped between the expansion and contraction. Obviously, again, since I last spoke to you, we've seen the German elections not being as worrisome to the markets as many anticipated. There was a big, obviously, vote for the AfD, particularly in the second choice votes. Huge swathes of Germany geographically voting them as their second preference choice. But really, the Conservative incoming administration is more mainstream. They've agreed to join a coalition with potentially the extreme left wing as well. But certainly the main CDU and CSU parties are sort of getting together. It's worst performance for the socialists for quite a long time in Germany. Schulz is obviously outgoing chancellor. He was at that meeting yesterday in London about Ukraine. We'll come on to that in a minute. It was, markets were fairly calmed about that result, even though there was a big swathe of 20% of voters across the age groups as well, which is interesting in Germany, voting for the AfD. So immigration very much at the forefront in many countries, particularly in Europe, in the frontline countries in Europe as well. So what we're waiting for at the moment is the ISM manufacturing PMIs here. This is those ones. That one I haven't refreshed that since this calendar. It's going to get me all the other ones on there. So the S&P PMIs have come out. Why haven't they come out? Why haven't they updated there? They've came out 10 minutes ago, but it hasn't updated on my calendar here for some reason. No. Anyway, hopefully the more important ones are these ISM ones here, 50.6. Little slip down from 50.9 last time, but we'll see if it's in line with the rest of the data we've seen from the rest of the world today with regard to the manufacturing sector. Interestingly, you see here Singapore and Brazil also doing better than expected. Singapore was in line, Brazil was better than expected. But let's see if things are ticking up in the US as well. Obviously, the president will have something to say about that if they are. And as sort of not predicted, I ain't predicting things. It's a terrible announcement. But he'd been very quiet on crypto, hadn't he? I'm not going to comment about what happened last week in the White House, in the Oval Office. But I'm trying to keep out much out of politics as possible. But it obviously affects the market. So it explains some of the moves we've seen. But so obviously he had his announcement yesterday about cryptos, and we saw the result on that. He's been quite since then. He's been quite some not derogatory comments, but some comments about some of the other stable coins. But the result yesterday, if we look at the Bitcoin numbers here, so after Friday's farce in the White House, we went down here. It was obviously the end of the month as well, and not forget that. So 78,000 was a new intraday recent low. Remember the big area we talked about, or we've been looking at for a long time now, has been this 92,000 level and 100,000 top as the resistance area, 95 being sort of the pivot area halfway between the two. So 92 was the big support zone, which we crashed through last week, quite significant as we went down. Trump's comments over the weekend, yesterday, particularly, if we look at the 4-hour candles or the 1-hour candles from yesterday, you see the immediate impact of him talking about extra cryptos being part of the main supply area. And so we had a big rally back. And the reason I put this on here, back through that key level, the 92,000 level. So 92,000 was breached yesterday. And he's just come out with some comments about other stable coins. So we've had an instant reaction against that as well. Some of them have been shaken out and perhaps disappearing. So we'll see. Lots of volatility thanks to the president. So 92,000 remains key to the long-term move of this. But as you can see, the bias here on the daily time frame, the bias remains to the downside. This is the blue line, remember, is the 50-day moving average. And we've been under that since this break down here at the beginning of February. So all of February, we were under the 50 and the 20-day moving average, and we continue to move down. Obviously, big volatility yesterday took us back over the 20, but we're back down against it at the moment. So the move down is still biased that way. This is our next new low level, this intraday low, the 78,000, and then we come back to where we were here. Remember the 65, 65 area. We were looking to break out that channel we were in pre-election times, and so obviously this is November the 5th, November the 6th after the election and all the rhetoric that was surrounding that, and we've rallied really aggressively to that 109,000. So 78,000 was that low from yesterday. So that's next target to the downside if this rally on the back of what he said yesterday continues. We need to break the 50-day moving average and obviously the hugely psychological 100,000 to the upside if this is going to go back to the upside in the short term. But obviously we're just at the beginning of the new month. So let's have a look at how all that pans out. As far as the major currencies are concerned, UT still capped by the elusive 105 area, but as you can see, we're still very much range bound. There's the big yellow line here is the 105. There's no buys above 105, and we've come back down again last week into the end of the month. So we'd had a fairly good sort of positive move from this low on the 4th of February to the closing of the month. Actually here, so it wasn't great, was it? So a bit of a sideways action, no clear trends, and as you can see how flat the moving averages are. There's no real direction. We want some angles on moving averages. We're going to move to the upside. So big support through the 50-day moving average sits there at 103.85, which we burst through briefly on Friday before we turned around. And we're up again this morning, back over 104, but capped by 105 again. So very much a mean reverters paradise. Euro for the second half of February, and we'll see how the spring holds for euro as well. So let's have a look. We're just data should have come across the channels now. Let's see if this is updated. I'll actually try Forex Factory as well. Oh, sorry, I meant to talk to you about. We'll come back to that in a minute as well. Right, okay, so we've got here on Forex Factory, he's got the ISM numbers across the board. So price is that's quite a big steep. So that's again suggesting quite strong inflation. The PCE on Friday was actually in line with expectations, but that's quite a step up that ISM, the prices manufactured are achieving 62.4. That's a big tick up. See how that feeds through as well. But 50.3 is the headline for the PMI numbers, so it's worse than expected. So it's still just staying just about in the expansive zone, but worse than expected. Why isn't the perhaps yes? Oh, there we are. The S&P. Oh, there we go. So there's a mixture of it. So the S&P, this S&P PMI number here is coming at 52.7, so much better than expected, but it's not as significant because there's a final caveat reading. The more important, the Institute of Service Management, the ISM, at 50.3, the sort of divergence in those two numbers. It might be that this is captured by the this significant price increase in there. So that should have talked about a bit of a hit on the it's got the 5 minutes on the dollar. That a bit of a surprise. Those two pieces of data. My network's slow. What's going on? Come along, Mr. Euro. Let's have a quick update. Everything's working fine here. It was just about that Euro chart. Yeah. So dollar's weakened again on that data. So 104.95 here. Will we see 105 today for Euro? 5-minute chart. Again, it's been anchored back here from this morning. It's been positive all day, as we said at the beginning. It's been a weaker day for the dollar today. So Euro dollar weaker on that ISM number that has missed expectations. Is this updated? And indeed, there we are. We're all updated here as well on our calendar as well from investing.com. So that's the one that certainly caught my eye. The 62.4. The prices that are being achieved from manufacturers as well. So even though the outlook is a bit dimmer than it was, so 0.6 of 1% is gone. 0.6 of 6 ticks. It's gone down. They're not percentages. These are just integers from 50.9 to 50.3. So there we go. We are down on that. So dollars are weaker on that data. So Euro eyeing 105. Sterling is doing the same, but at 127. In fact, it spiked to 127 here on the initial data. Ahead of that, remember, guys, this is just the 5-minute chart. So as you can see, I mean, a great trend following system today. We've been long, got out there. Probably as the red's got under the second one, still got back in here at new highs, and it's just classic trend following a day. Got out again there, ahead of the data. Looked like it was going to go short here, didn't. We got a new high here for the day at 14.20 still. Quite close to the data, but that's a new high, up, and it's got out there. So, and then long again here. Trend is with us still. Are we going to break and hold 127 for cable? Yen will be similarly performing, but back to 150 under 150.40 today. That's a trend line. I think was it I can't remember what that one is. We'll go up to high time frames to show, but that's a break of that. That's 5 minutes on dollar yen. Just take this a bit higher. Dollar yen. Big loop into 150.60 zone this morning, and then back down again. So dollars moved up and then given up the ghost in the last 3 hours against the yen here. Again, on the daily time frame now, this pair is off its floor under this floor we formed here towards the end of February to this 148.64. Remember, we put this in yonks ago. This is our December low, this previous peak. So again, these intraday levels shouldn't be ignored, guys. We put this line, this 148.64 level in a while ago as a support, not a support area, but a potential downside target. The big, obviously, support areas through the big round 150 itself, which we have finally just recovered on Friday, following this 1, 2, 3, 4, 5 days under the key 150 area. Tempting to move this lower, tempting to try and get some more sellers in there. At peaked on Wednesday at testing that 148.70 zone here from December. And then we've moved up Thursday, Friday, and we're sort of up this morning, today. But again, another one that remains very much in a downtrend. The stronger yen, relatively strong yen. Remember, these are still 30-year lows for dollar yen. 30-year highs for dollar yen, but we're still under the 20-day moving average, which now sits smack bang here at 151.50 on the 20-day. So that remains very much in a downtrend. Some signs of life in the MACD signal line The MACD line touching, not crossing, but they're coming at each other a bit of an angle. That's always quite positive. RSI starting to rise, but still way below 50. It's 41.1 at the moment, so it's still negative. And the bias is still to the downside on the daily time frame for dollar yen. Let's just go through all the majors while we're here. 62.42 is where the Aussie trades. So again, our high here as we went to stop 64 on that final day of March. Well, last time I was looking at the charts. This is a good example of what I was talking about turning around. So we'd been long here. We'd trailed our stop loss up and then reversed really aggressively on the Friday. So a lot of our second positions were taken out. That were still very much in the money, that we've been long for quite a long time. The Aussie, I think it was the 6th, wasn't it, or something? Yeah, here it was the 5th or the 6th. Here it was the 5th, wasn't it? Nearly got stopped out a couple of times, but we rallied and rallied and rallied, and we didn't catch the top. I think our stop loss was final was around about here somewhere. But on that Friday, it reversed. And I closed. If it didn't close, I closed most of them out because I was going away. I wasn't looking at things. Little did I know. Again, this is the art of trading, guys, or the art of having a system or a strategy, or following your rules. Just because we'd been long here doesn't mean that this was going to happen. This could have happened. It could have continued up here. It didn't. We reversed into the big round number at .64 and came back down, and we've reversed and we're lower than when we first triggered long back here at the beginning of the month. But it doesn't matter, does it? Here we would have been short. This strategy, the automated crossing AMA strategy, would have been short here on the 26th. It would probably have added to its position here on the 27th, given that it was a big candle and it breached the 50-day moving average as well to the downside. End of month shenanigans as well. We've obviously got all that going on. Obviously, the swirling political situation continues to impact. Remember the Aussie and the Kiwi, key sort of more liquid assets than the Chinese yuan or what's going on in China. So any sort of ramping up in geopolitics impacts the Aussie and the Kiwi somewhat disproportionately as well than other currencies. So so big move down against the Aussie yesterday, and we bounced here again in line with the weaker the weaker dollar story rather than the stronger Aussie story, to be honest. But again, that remains very much biased to the downside. As you can see here on the MACD, very clearly to the downside. There's a turnaround. That's just based on today in the RSI, but that's still looking relatively weak. A break over the 50 at 62.56 is needed before the Aussie starts looking even into sort of sideways action. Canadian dollar 144 this morning. We've come back, or today we come back down from this 144.70 high we had on Friday. So again, another one we were trading. It was long, wasn't it? To the upside. So dollar up here, US dollar now. I'm talking about compared to the Canadian dollar. So a rollover from the highs of Friday so far today. I say in line with everyone else today, with the weaker dollar, but still dollar much on the front foot compared to the Canadian loonie. And finally, the Swiss franc and the Kiwi. So the Swissy here on the daily time frame, sort of holding its own, and again a weaker sort of rolling lower rather than straight, clear, strong direction to the downside. We've got a flat 20 and 50-day moving average rolling over. We had that negativity here. Again, just before I left, as a 20 cupped below the 50-day here, and a big down day there on that Thursday, and then a flat Friday, but we were out down here on some short positions on that one as well. That's turned around, but again, didn't hold the break of the 20-day on Friday, and we're back down again this morning. So again, another one's rolling to the downside, the dollar against the Swiss franc. Indices, we had a really good run over at the end of last month for shorting some of these rollover in the indices. This is the S&P. Sorry, it's not. It's the the Dow to the downside. So big down day on the 20th. That Friday was phenomenal. I think we got out I don't know if we got out on the close or we got out somewhere. But anyway, we were out to, I think somewhere we were closed out on the close, but we were happy to obviously take that big down day on the Thursday and Friday. From that, although we went low, we've bounced back from that on this Friday, the 28th, the final trading day of the month. So some shorts getting closed out as we bounce back. So, but again, needs to give it an uplift back over 44,000. My end of day strategies, which did very well for January and February thus far, it's looking for a potential long tonight on the Dow. The S&P, the Dow 30 is currently looking to take a long position with a stop around about 43,500 and a target of 44,500. Those sort of round numbers. But we'll see how this candle actually finishes. So it's really the what's triggered my system will probably be this bounce back over the 50-day moving average on Friday. So if we remain positive tonight on close of business tonight, the Dow might be triggering a long position as it's sort of up above this cluster here. So long position possibly on the Dow, which is why we're on what's my little system's doing. We're also looking to go long the pound Swiss and long the pound yen. So there's 3 potential trades tonight on a Monday. But obviously it's only 15:13 at the moment. These trades won't be taken until around about 21:30, 2200 hours. So there's plenty of time for that to all change between now and then. But currently, sterling long against the Swiss and the yen, and the Dow leading the US indices at the moment. Cash market wise, the very flat indices at the moment. Obviously, the tariffs on China. Well, yeah, the extra 10% on China, Canada, and Mexico. The 25% on Mexico and Canada are due to come in tomorrow, Tuesday the 4th. So yeah, hence the obviously weakness we've seen in the Canadian loonie, and having had a month of respite, and they're now back in the crosshairs. Obviously, phenomenal scenes on Friday in the White House. Never seen anything like that before. Don't really want to see anything like that again. Unbelievable. But there we go. That's politics under Trump 2 as interesting. Let me just say that interesting as one was expecting, and certainly Friday was could not have been anticipated. But there we go. So Dow possibly long tonight, but we'll see. The DAX has hit a new all-time high again today. Big, strong, powerful candle today over the 22,950 resistance we'd had here in the middle of February. Strong start to March. We're also over the 23,000 levels. So I'll mark that up as well. So DAX continues to move higher. Remember, the elections were here on the there's a reaction there on the 24th into them. We were worried. They rallied on not being a strong centrist sort of coalition. The right-wing biased coalition now will take charge in Germany. So we've rallied since then on a strong day today, obviously on the back of, again, the agreements that seem to have been hammered out in London yesterday between Starmer. He's come out of this quite seems to come out of this quite positively. He seemed to manage the relationship with Trump quite nicely, surprised him with an invite from the King of England. So he liked that, played to Trump's ego, full state visit. So obviously things with Zelensky on Friday overtook both Macron and Starmer last week. But anyway, DAX up to new all-time highs. The French CAC also at new all-time. Don't really talk about the CAC, but the CAC 40, but new all-time highs as well in France as well on the back of this sort of agreement within Europe. I mean, to be fair to Trump, he will take credit for getting the Europeans to actually get their butts into gear. How the Americans will be portraying this, but yeah, I mean, action is action, isn't it? I suppose. To the upside. So back across the Atlantic, the Nasdaq is a bit weaker this morning today again, having had a very weak end to February. So the 22,000 breach that we had in the middle of the month has been turned around quite significantly, and since the 21st, that fatal Friday, we've been under the 20-day moving average. So big turnaround for the tech stocks. A lot of them getting hammered on relatively good news. Nvidia's data last Wednesday was okay. It just wasn't. It was sort of in line with expectations, and it's they're still growing, but the blockbuster growth, exponential blockbuster growth is sort of signs of cooling. But even so, it's still a phenomenal story. So that we have been over lots of participants saying how richly priced the US stock market has been, but this is looking possibly quite weak now. If we zoom that in, you can see we're still consolidating the highs, but this has been a double top, a sort of a range that we've been in for a while. So the break of this could be very significant, given that we're congesting at highs. And as you can see, if I actually take this to the week, actually, I'm sure the weekly shows it as dramatic. No, the weekly's still looking okay as a congestion. So here on the higher time rate, the weekly, it doesn't look too ominous for a big sell-off, because you can see we're still consolidating. So we've had two significant down weeks. If this first week of March, then it's only 3 weeks to the end of the quarter, obviously after the end of this week. This is weak, and we're anywhere down here below last week's lows. We could see that could be signs of a further decline here, in particularly the Nasdaq 100, particularly vulnerable to interest rates staying higher for longer. Obviously the data last week continued to suggest that there's still possibly one, possibly two cuts from the Fed this year, but it's now September, October timeframe, or even the June, July window is still there, but we could slip beyond the summer if data continues to cool. But obviously this week will be key as well. We've got non-farm payrolls and ADP later on this week as well. But all of that to come later this week. So just watch that. That's a pretty weak close last week. That's under the 20-week moving average for the first time since this big down week in September. But then that turned around and we rallied really hard into the end of the year. So watch this on see where we close on Friday will be key for the Nasdaq 100 going forward. And as you can see here on the daily, you can zoom this in. You can see, markets react to the downside much more aggressively than they do to the upside. So a gradual uplift, nice gradual uplift here, but then significant sell-off last week, starting on that Friday before I went to air, and a significant down week last week, and a huge sell-off on Thursday, and a bit of a bounce on Friday, but we're below another one that we're below this low, a bit like the that Bitcoin chart we were looking at right at the beginning, under that 20,800 level for the Nasdaq 100, and we're back into it again this morning today. So you can see big move down here on the daily into an oversold area on Thursday, bounced Friday, but they're still down. So pressure's still to the downside. All the data's in now. Nvidia that's the big tech companies. That's looking weak. The broader ranged S&P 500 doesn't look that much different, does it? We're still, zoom this in again, still sort of congesting at highs, and it's gone on for a while, hasn't it? But we've been, we're starting to move out. If we go up to the weekly again for the S&P 500, you'll see a similar pattern to the one we saw. So the only positive for the more important S&P 500 is the fact that we've held a 20-week moving average. So we tested it here at the beginning of the year. We've rallied off it. We pushed to new all-time highs a couple of weeks ago, but we've had two consecutive down weeks, and we're down again currently today. So that's and we're closer to our 20-week 20-period moving average as well. So that's held. It's held. It's held. It's held. It's held. It's not going to hold forever. It broke here back in September 2023, and we went down for a month or so before we rallied the end of October, and it's just not looked back. It didn't look back since then. So healthy a sell-off or bagging of profits at the end of the earnings season is quite normal. So still positive, and that's still biased to the upside as far as I'm concerned, the S&P 500, because the 20-week moving average is holding there quite nicely. But if we drill down into last week, it followed the other stock markets with all the news that was swirling around. Obviously, all the political news. Obviously, Ukraine. We've still got the ongoing situation with Hamas and Israel. Israel saying they stopped all aid going in yesterday. Just breathtaking situation. But so we're still sort of consolidating at highs. But we're sort of at the bottom end of the channel, aren't we? You can see that. Hopefully you can see that. We're sort of at this bottom end of the channel there. So let's have a look. What else we've got going on? Oh, okay. Sorry, I'm just looking at a news feed here. Oh, Trump set to make investment announcement at 18:30 GMT. You've probably all seen that while I've been prattling on here. So 18:30 GMT. So in 3 hours, Trump set to make investment announcement. So it's presumably the strategic reserve with regard to the crypto story. So we'll see what's actually he's said there. Obviously trying to grab attention back from the Europeans and the situation in Ukraine. Come back when you want a peace deal, Mr. Zelensky. Man. So that's the stock markets. Also in Europe, UK S&P, UK FTSE 100 over 8,900, new all-time high as well for the FTSE, 8,900 on the obviously on the back of European stocks are all higher on the back of a positive weekend for Mr. Starmer politically and the rest of the Europeans and standing by Zelensky. We've talked about thousands of extra UK missiles being sent to Ukraine. See how the Atlantic Alliance continues or moves forward. Don't need to say anything, do they, really? The agenda is being moved forward for them. So rest of the week, we have quite a busy week, obviously topped by the non-farm payroll data. Let me just what's wrong? Callus got this one. Let me just fix this so we can just show the sorry, let's just get rid of Russian data, Spanish data, Singapore. Sorry, all due respect to you guys. It's no. So Korea. Let me just make actually just make it there. Sometimes they don't get all of them. So I'll just apply this for the rest of the week. So tomorrow we got the RBA minutes. We'll come back to the inflation in Europe in a minute. I've got that chart before, didn't I? Wednesday is ADP day. Lots of chatter. We got the services PMIs as well coming out later in the week. So ADP expected around about 150,000, 144,000 here on this calendar. Down from last month. So we'll see what that's like. We'll be live for that on Wednesday. Tomorrow, we are live. I can't remember what it was. I think it's about 1 o'clock again for I'm not sure what it is tomorrow. Anyway, I'll be around live for that tomorrow. Thursday is obviously weekly claims. Again, last week there was quite a significant, where's the weekly claims gone? Initial claims, actually quite a significant hike up, a 220,000 lift. Which sort of caught some by surprise. But even, as I said, it's now back into a sort of a normal area, this 240, 250,000. So certainly the continued signs of not cooling jobs market, but certainly things not as robust as perhaps they were. So there's a bit of an edge, the strength of the jobs market starting to show signs of creaking a little bit, but it still remains very, very positive. But yeah, that was if this is an outlier, this jump up. I'm not sure I can show you it on here, but if I go to Thursday on where's the claims? So Thursday, it's Wednesday, isn't it? Sorry, it's Thursday, isn't it? Claims. I can't see it there. Oh, that's there, you fool, there. Sorry, this is what, yeah, there we are. So that's the big jump up from last week, this 20,000 break. So we're back over this 220 to 240. So it's quite a significant hike. But is it just a one-off like we saw here on December the 12th? That's what I was trying to show you, where we came back down. So we'll see that later on. Okay. So obviously the other thing, the main event for Thursday is the ECB, and they're expected to move again with their rate decision, another 25 basis points, where the deposit facility comes to 2.5 and the main rate is 2.65. So that's been nailed on the telegraph. That's how much further they go. Market is still expecting this rate to be around about 2% by the end of the year. That's still on. That might not, if this PMI data starts to pick up. We'll see. Obviously, the impact of this agreements about increasing defence spending. Obviously, will have a knock-on to inflation as well, which remains relatively spiky. And again, that's something I was wanting to show you from earlier today. Just go back to that. The inflation today from Europe was hotter than expected. Core inflation here 2.6 from an expected 2.5. But again, if we look at the candle, you see how we've come down, but it's just not moving low. It's not getting down to this 2% level. It's been very sticky up here. It's stuck here since for over a year now. Around about a year, we've been over this around about this 2.5, 2.6 here in the Eurozone. So we've come down quite significantly from this obviously top of close to 6%. From all the stimulus, we come down very aggressive, but again, we're stuck like other areas, still a bit high compared to comfort zone. Down here, obviously pre-pandemic, we were talking about, disinflationary situations, and that was the big worry. Inflation had gone forever. Obviously, COVID came along and kicked that into the grass, and we still remain elevated. So prices for ordinary businesses, ordinary consumers, still remain very elevated compared to where they were pre-pandemic. So, it's 5 years ago now. So people are still feeling the pinch, hence existing governments being under lots of pressure in all parts of the world. So, yeah, it's continuing to remain sticky, as we said. So the ECB pulled both ways, trying to get that inflation down, putting interest rates down to try and pull that level lower. So again, that was a bit of a sign of stickiness in the inflation data. Yes, again, this time from Europe this morning. So I say ECB on Wednesday. On Thursday with the weekly claims out of the US on Thursday, and Friday is the big one. Non-farm payrolls, 150,000, 155,000, 156 here on this particular calendar. The last Reuters surveys I looked at this morning were around about 155 as well. So we'll see what that headline number looks like. Remember, the unemployment rate is ticked up, remained at 4%. The main number, the wider U6 at 7.5%. Again, perhaps a sign of the weakening of the US jobs market. The edge has been rolled off. We'll see if that week last week for the weekly claims was just a one-off or if it's going to continue. We'll see. Obviously, lots of central bank chatter. We're at the beginning of the month. Obviously, the PMIs, as I said, the service is still to come later this week and into next week as well. So watch that on Thursday as well. The ISM non-manufacturing for the US on Thursday. So busy week as ever, the first week of the new month. So let me just leave you with the euro. So it's left Or the dollar, I should say. So yeah, 104.95 is more or less where we were when we left in it. When we last left there, we couldn't quite get to. Did we actually get over? Yeah, we did actually spark to, in the last 10 minutes. We have actually got over 105. We've been as high as 105. Where were we? 105.3, 105.03. So we have breached the 105 area. It's been a strong day today. Stay on that surfboard, you short-term traders. So if the 5 minutes positive, certainly the 15-minute trader will still be on his trailing his stop loss up behind. So my stop loss would be probably around about here now. Wouldn't try and get too close under that 9 period moving average, or around about the 9 periods EMA here. But nice rally from the first trade break this morning. Again, a classic little move there. See here as the European sessions got underway here, we tried to move down here. Initially under 104, looked like we were going short here, didn't it, from this early trade to start the new week. Turned around nicely, quickly. Big positive 15 minutes. See the size of that candle compared to everything else today? That's the trigger candle. The previous high of the Asian session was breached half an hour later with another similar sized candle. The MACD signal line and signal line and has crossed the histogram. The MACD and the signal line have crossed back here. The histogram has turned green here on that small candle. Then the big follow through buying here, and off we've gone and blah 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 blah. And we stayed long. We haven't closed under the middle of the moving average, so our moving average stop loss will be here now. Thank you very much. Pips in the bag. Just trail it up, trail it up, trail it up. Either automate it, so that's where your stop loss sits, or you follow it, or whatever, 15 minutes. If you're an hour trader, similar style. And that's because we had a strong trend today. It doesn't always happen like that. I mean, obviously, you very rarely get days as positive as that, but that is a great trend following Traders Day to the upside. So there we go. A weaker dollar today. With gold at 2880. No, we didn't go there. 2886 at about. So another one that's moving higher again today, and it's been long. Really, the MACD crossed back here at on the 28th of February, Friday at 7 o'clock. The actual trigger was really opening trades this morning here on the hourly chart for gold today. So again, another 15-minute chart that's looking nice and positive. Today to the upside in the last 50 minutes has been particularly strong from 3 o'clock server time. So off we go. So don't forget, guys, if you come and join us, please do. We're here to help you. Our products are very understandable, very simple, very straightforward. Most new clients or existing clients stick to the standard two-phase approach. Some try to do it in one step. It's just got higher rules or tighter rules, but it's it's how you want to play. But remember, the beauty of the proptrader.com, you get the facility, the ability to trade with big numbers. Yes, these are simulated accounts, but it's live prices from live liquidity providers. So where would you get the chance to play with a 50,000 account for less than $350? If you're a new first-time client, we still have a there we go. Let's go back to that one. We still got our coupon codes available. So new 25 is still available till the 30th of April for first-time clients. So that gets you a huge 25% discount. So you can only use it once, obviously, if you're only new once. But why not go for hefty 50,000 account? So you get 25% off that 345. 25,000 isn't that? It's another nice sized account and saves you just over $100 and gets you in with a 25,000 account. You've got a target is to make 10%, not lose more than 5% on a daily basis. If you're losing 5% on a daily basis, guys, you've got to be careful. It's trading for you. If you're allowing that to happen, always think in percentages. And if you're losing that sort of level, perhaps trading isn't your psyche. Go and work on your psyche first before you start risking real money. But you with the prop trade .com, you know, you've got that ability to play with these big numbers and allow you to take some, gives you the greater margin to allow you to trade with lots of other assets if you want to. Obviously, lots of people just trade one or two assets and hone their skills, which is fine, and therefore there should be then those guys and girls trading that way. You know, you want to focus very much on these numbers as well, these daily loss levels, maximum loss levels, and understand what's involved, understand what the leverage means to the account. Don't get too greedy, and then, you know, you can start making some good money. And, you know, profit shares start from 80% and go up to 90%. You can scale it higher. You know, 2 million is the 200,000 is the way forward. So you can, you know, jump in at the deep end as well if you're been around a while. Look at the pro accounts as well if you're obsessed with trading the news. I know a lot of you are. If you want to actually not have that, you know, I think the rule about, you know, 2 minutes before and after the news, I think it's, you know, it's great because spreads just can go mental as the news comes out. So let it cool, let the news get absorbed. Even, you know, 5-10 minutes after the news, let's see what's happening before the real money starts getting played. Don't get played by the market makers, my friends. Okay. Anyway, I'll see you tomorrow. Safe trading, everyone. Have a great Monday, and welcome to March. Spring's in the air, sun shining out there, the blue sky. I can see through my blinds here. So good to be back. Take care, everyone, and we'll see you all tomorrow. All the best, everyone.